We have been brainwashed to believe that Asian session is a slow session and cannot be tradable. We have been brainwashed, new traders especially have been, brainwashed to believe that they only need to trade just New York session and London session. Hi guys, my name is Fabulous. I'm a trader. How about I change that narrative today? How about I tell you you can make a lot of money trading just Asian session? How about I tell you you can also make more money trading just a single pair during Asian session? All you need to do is, watch this video to the end. Hi guys, my name is Fabulous. If you are new to the channel, kindly leave a subscription button, kindly like this video and share to your friends. In this video, I'll be showing you guys how to trade Asian session like a pro. This is the part 2 of how to trade Asian session like a pro. You can check the previous video for the part 1, right? So let's dive into the video. Okay, first of all, let's look at candlesticks with the highest probability. In my previous video, I was able to break down the strategy I use for Asian session. So I was able to, break down the entry criteria, the risk management, and also the psychological strategy behind the Asian session strategy, right? Yeah, so this is just like an advanced video for the strategy. Okay, candlesticks with the highest probability. So we have this to look at candlesticks with the highest probability. Time to look for entry 2 a.m. downward Nigeria time, right? Entry techniques and risk management. Now these are the 3 types of candlesticks with highest probability. These are the 3 types of candlesticks with the highest probability. So we have this. For this, this needs to have a longer wick than the body. The first candlestick needs to have a longer wick than its body. So these are the candlesticks you want to pay attention to when looking for setups on the highs of the candlestick and the lows of the candlestick. So candlesticks with more wicks than its body. Now the reason why we are going for this type of candlestick is because this candlestick initially was a buy candlestick, right? Now price bought to this level here, and then sellers came in around this zone and then pushed price lower, then price closed here, right? Now if the next, or let me use when the next candlestick opens and trade to this level again, there is high probability that these sellers around this zone will still want to push price lower. Now you as a trader, you are to capitalize on the sales that would come around this area, right? Yeah, so that's the idea behind this candlestick. We believe that if price trades again to this high, the probability of sellers stepping into the market is high. Let me take that again. We believe that if price trades higher, the probability of sellers stepping into the market again around this high is high. Around this level is high, right? This is why we consider this type of candlestick a high probability candlestick for our daily high and low strategy, our Asian session strategy. Now, when the next candlestick opens, the next daily candlesticks open, right? It's going to buy above, maybe start buying from like 12 a.m. downward. So it's going to buy to like 2 a.m. and then 2 a.m. would sell, leaving a wick. Now we just need a 1 to 2 RR. We just need to look for a 1 to 2 RR on the sell, and then we are good to go. We really don't need to hold the sell till it trades to the low, because price can still maybe sell just 1 to 3, and then before everything starts to buy. So we just need 1 to 2, and we are good, right? So this is my number one candlestick I like to look for when trading this strategy. A daily candlesticks with more wicks than its body. Now this is for the sell, and then for the buy, so the buy is going to look like this. So it's just going, okay, let me just switch this. Okay, let me finish the sell part, and then we'll move to the buy. Now the next candlestick I like to look out for when trading this strategy is this engulfing candle, right? Or these big candles with small wicks or no wicks. Now there's candlesticks with no wicks, so it looks like this. So this is a bullish candle with no wicks, right? So now when there is no wick, it means there is no zone for price to fill in, or there is no level for price to fill in. Now the tendency of price trading lower is high when there is no wick on a candlestick. Now if the wick is here, if the wick is here and then there is no wick here, the probability of price trading lower is lower compared to the probability of price trading higher. Now price is likely to trade higher because there is no wick, there is no area for price to fill below. So you need to take this. There is no level or area for price to fill below, so price would likely trade higher than trade lower, right? That is why we look for this type of candlesticks when trading the Asian session strategy. So if there's no candlestick here, or the candlestick is just the wick is is small compared to the body, now price can easily trade higher. Just take out the high like so, and then sell. Like this. Yeah. So you put this candlestick in your, take note of this type of candlesticks because they have a very, very high probability. So this candlestick. Now I already explained the psychology behind this candlestick. Let me do it again. Let me explain it again. For this candlestick, for this one, we believe that there are sellers on this zone, and this candlestick was initially a buy candlestick. Now sellers came into the market around the zone and then pushed price lower. Now if price trades again back to this high, the probability of price trading lower is high because we have seen price react on this zone, right? Now for this candlestick with the small wicks or no wick, we believe that a candlestick with no wick means price have nowhere to fill, so it's likely to trade opposite, or it's likely to trade opposite the candlestick. Now if this is a buy candlestick, with no wick, the chances of price trading lower is high. If this is a sell candlestick with no wick, the prices of the chances of price trading higher is high, right? Yeah, so let's look at the next candlestick I have here. This is a dodging candlestick. Now it's actually similar with this candlestick here. Now we believe that there are others. This is a dodging candlestick. It represents indecision in the market. It means neither the buyer or seller in control of the market, right? Now if price trades lower to take out the high, possibility of price reversing is high. If price trades lower to take out the low, the possibility of price trading higher is high, right? Because there are, there are forces here that, pushed price down, and there are also forces here that pushed price, up. You get what I mean? Now, before this candlestick closed, it was buying, and all of a sudden it reversed. Now it was still selling around there, all of a sudden it reversed. So if price can still trade lower, we can actually look for a buy setup just below the wick of this candlestick. This is how I see these candlesticks. So let's look at a chart. Okay. The first example I have here is this. Let's take this to daily time frame. Okay, this is the first example I have here. So we can see this candlestick here, this here. So this candlestick have more wicks than its body. You can see the wick, right? Now we have outlined the high, we have outlined the low, right? So let's look for entry on the 15-minute time frame. Guys, this is hindsight. So you just play it. Okay, this is it here. PDHT means previous daily high taken. PDLT means previous daily low taken. So when you outline the daily high and low, you just need to use this trend line. You outline it, and then you draw it to the left hand side like this, right? When you outline it, you wait for price to trade back to the high for a trade. Now let me do it for you guys. Now you take your trend line or your horizontal ray, but I like to use trend line, so you can still use horizontal ray. So let's use horizontal ray. You take your horizontal ray. Now this is the previous daily high here. This is the previous daily high here. You outline it. Now you draw it on your previous daily high, or you paste it on your previous daily high. Now, yeah. So when you're done with that, the next thing you want to do is you want to wait for price to trade back to the high, and then take out the high. Just trade above it a little bit, like a fake breakout. So we're actually waiting for price to make a fake out above the previous daily high, for us to consider a sell trade, right? Now price traded to the daily previous high, which is this, and then you can see how price it actually made a fake out here, pushed above, looking like it wants to break above the high, and the next candle closed inside. I actually like to trade this type of setup because they have high probability, chances of them playing out is so high. So we can see how the next 15 minutes candle closed inside. Remember, I taught you guys about engulfing candles. So you can see how this 15 minutes candlestick engulfed the previous bullish candlestick. It engulfed the previous bullish candlestick. Now this is a good entry signal. Now this happened by 6:45 a.m., which is actually our still in line with our time, right? Now you hop in for your sell trade at this point. Hop in for your sell trade. Then you need to give your stop loss room to break, right? So you put your stop loss just let's say like a 15 pip stop, or just above the high. You just give it about 4 pips above the high, right? Then you go for your 122. Boom. You can see how this trade played out without stress, right? Quickly move to the next example. So the next example I have here is this. Let me take this out. Okay, this is the previous daily low. I've actually explained how to mark out the daily low and high, right? So this is the previous daily high. Yeah, this is the previous daily high, and this is the previous daily low. A lot of the time, the previous daily high is the high of New York session, right? Yeah, so this is the previous daily high, this is the previous daily low. Now what do we want to see? We want to see price trade above either the previous daily high or previous daily low for a trade, right? Now we can see how price traded above the previous daily high here, traded above the previous daily high. So what we are looking for engulfing candles or bearish sentiment, that can tell us the bears are coming into the market, right? Now you can see how price traded above. Yes, our first criteria, price needs to sweep the high. Yeah, price did swept the high, rather price swept the high. Now we want to see engulfing candles, wedge pattern, to take an entry, right? Or we want to see a break and retest on the daily high or daily low. So the break and retest just look like this, so we want to see price break below after taking out the high, break below, and then we want to see price come back for a retest like so, and then immediately we get the retest. The next thing we want to see an a bearish candlestick, right? So immediately you get your bearish candlestick. Now you need to wait for the 15 minutes candlestick to close. Remember, we are taking our entry on 15 minutes, so immediately we get our bearish candlesticks, then we hop in for the trade, right? Yeah. So let's move. Now price traded above, right? First criteria met. Price, now we want to see bearish sentiment coming into the market. Price traded inside the daily candles, daily high. Now when you draw your trend line like so, you can see this is a wedge pattern, which is signifying an exhaustion in this trend, in this bullish trend. You can see, so it's signifying an exhaustion, right? So price is exhausting and it's telling us that the bears are coming into the market, right? So this is basically what we want to see. Now immediately price breaks below the trend line, just inside your daily high, you can hop in for a trade. Now you need to make sure the candlestick breaking inside the daily high is a healthy candlestick. Now what do I mean by candlestick? What do I mean by healthy candlestick? A healthy candlestick is a candlestick that have a bigger body than its wicks, right? Now take a look at this candlestick. For example, this candlestick, you can see it has a big body and a small wick. This is a healthy bearish candle, right? So this type of candlestick has, they have high probability to play out, right? But this one with the wick, you can see the wick, a very big wick and with a very small body. This type of candlestick, it's signifying rejection, right? So you really don't want to hop, you really don't want to take a trade when you see this type of candlestick. You really don't want to take a trade when you see this type of candlestick, right? So when you see such a candlestick, the best thing you can do is you wait for a retest on the daily high, which happened. You can see price traded back to the daily high and then it retested, and then the next bearish candle after this bullish candle engulfed the previous bullish candle, which is an engulfing bearish candle, right? Now this candlestick is our entry signal. This one here is our entry signal. Let me outline it well for you guys. This candlestick here is our entry signal, this bearish candlestick, right? So we can hop to this trade, you can take this trade right from here. I mean, you can still take the trade from here. You can take the trade from here and then put your stop loss above. But honestly, I like to see healthy candlestick before I take a trade. So it's better to take the high, high probability type of candlesticks, candlesticks that has, high probability to play out, which is this candlesticks here, which is this candlestick. Okay. Now, immediately this candlestick close, you can hop in for your trade and then you go for your 1 to 2. Simple. You can see price traded over, we have about, okay, up to 1 to 3, but then I'm really very much okay with 1 to 2, right? So this example 2, you can see how price is, reacting on this zone. Now let's move to the next example I have here, and I'll also show you guys how to avoid losses, or how to know when the setup would be a loss or a losing trade. Now the next example I have here is this. This is the previous daily low. This is the previous daily low. Let me take this off. This is the previous daily low. Now remember how we do it. You go to your daily time frame, you mark out the current daily candlestick. Now when the daily candlestick close, you mark out the high and the low with your trend line or your horizontal ray. You just draw a line and you stretch out the horizontal ray to your right hand side. So when price trade back to that zone, you can see identify price action on that zone, right? Now when you draw it, now you switch to your 15-minute time frame. Your 15-minute time frame would be your entry time frame, right? Now I have done this on the daily time frame, so we can see this is the daily previous low. Now price traded back to the previous low, and then we can see how price reacted on the low. Now this is 2:45, which is in line with our time, right? In line with our time. Now all we want to see, we just want to see price take out the low, sweep out the low, trade below the low, and then reverse. That's all we want to see. Now this 15-minute candlestick, it's closed here. Now this would be your entry. Now if you see such a very big candlestick, now you can decide to wait for it to retrace back a little bit, but sometimes it might not retrace. For example, you can see this one, it didn't retrace. It didn't retrace, right? So sometimes you just need to hop to the trade just like that. So this is the buy, take the buy, and then your stop loss can just be below the zone, and then you go for your 1 to 2. Boom. You can see how this strategy is playing out, guy. I mean, this strategy is very effective. You just need to know how to use it properly. Now let me say this. If you have taken a this trade, let's say if you take a sweep of the low trade or a sweep of the high trade, there's no point taking a sweep of the high again. Let me come again. Now if you successfully take this buy trade to the upside, now you don't need to look for a sell trade on the previous daily high. That's what I'm saying. Now you, like, sometimes it can actually play out when price trade to the the previous daily high. After you take the low, it can actually still sell again, but the chances of that happening is low. I have tested this, so I know what I'm saying. The chances of that happening is low. Take for instance this one now. If you maybe entered a sell here, you definitely be at loss, right? So when you take one of the trade, either the high or the low, you don't need to take another one again. Just that, be okay with your profit, and then you come back the following day to take another trade, right? So when you take a trade, if it's a winning trade, be okay with the profit. If it is a losing trade, you can now look for what we call second chance, second chance entry. So sometimes you need to give your trade a second chance, right? Yeah, so that's basically it. Now take a look at this previous daily high. You can see how price traded and then it sold a little bit and then it pushed up. Now if maybe you take a sell trade here, this would have been a losing trade, right? So this is what I'm saying, this would have been a losing trade. So this is how we avoid losses. So instead of taking a sell here, you just chill, go have fun, withdraw your profit, and enjoy your life. I mean, so yeah, one trade a day is okay, guys. You don't need to trade 5 times. You don't need to take 5 trades a day. I mean, when just 1 to 2 is okay. Imagine you have $100 account and you're risking $100 to get 200. You have an immediately this trade hits your 1 to 2, you are making $200 extra. I mean, $200 convert it to naira. That's a good amount of money. Imagine you have $1,000 in your account and you are risking it to make 2,000. If maybe you take this type of trade with a 1 to 2, you are making 2k. I mean, it's a good money. It's good money. I mean, so after a winning trade, you close your laptop, keep your phone, go chill, or read books. Read trading related books or financial books, right? So you don't need to look for other opportunity again. I mean, even though you want to take another opportunity, or maybe you see another opportunity, it's best for you to reduce your risks. So you need to reduce your risks. So you don't risk all your whole capital or all your whole profit. So you need to make sure you are, dropping down your risks, right? But trust me, after a winning trade, you don't need to look for other opportunities again, right? Because I believe we are all growing traders, right? Maybe when you start making money consistently, you start making thousands of dollars, you can now say, okay, you want to maybe take 5 trades a day, risk from $1,000 per trade. You can do it when you have the money, but now you don't have the money. I mean, you need to be okay with what the market give you for now, right? Yeah, so that's basically it. I hope you guys enjoy the video. I want to urge you guys to watch this video till the end. Start from the beginning, watch it. If you have to rewatch it again, you watch it again, okay? And also I would be dropping this type of content in this channel back to back, so do well to subscribe, like the video, and then share with your friends. Bye for now.